Okay, buckle up, because what I'm about to tell you might just blow your mind a bit. What if I told you that in the first half of 2025, Solana had nearly 13 times more daily active users than Ethereum? Yes, you heard that right, 13 times. Today we're going on a deep dive. We're digging into the latest market insights, specifically this really comprehensive half-year report from Binance Research. We want to uncover why Solana is suddenly, dominating in user activity, and how Ethereum is adapting, what its strategy looks like, and really what does this all mean for the future of crypto? It's a look at two very different paths these giants are taking.
That's right. And that Binance report, it's a fantastic snapshot. Our job today is basically to pull out the most important gets for you, cut through the noise, give you the key takeaways on how these incredibly important networks are evolving right now.
All right, let's kick things off with Solana then, because honestly, its numbers for the first half of this year are just eye-popping. We're talking daily active addresses that's basically unique users doing stuff each day. Solana hit, get this, 3.3 million. Ethereum, still massive, of course, but around 0.4 million daily active addresses. That's where that 13 times figure comes from.
It was staggering difference in sheer user numbers, yeah.
And wait, there's more. Daily transactions, Solana processed, 328.6 million per day. Ethereum handled about 1.4 million. 328 million. How is that even possible? How does it handle that kind of volume?
Well, that's really the core of Solana's design, isn't it? Speed and volume. And the immediate impact is super clear when you look at the cost. The average transaction fee on Solana is tiny, like under 0.0204, 4/10 of a cent.
Wow. Okay. Compared to Ethereum.
Ethereum's average fee was around 0.61 cents, so like 60 cents. That massive cost difference just makes Solana incredibly accessible for, everyday use. Microtransactions become totally feasible.
Right. It makes total sense. If it costs almost nothing, people will just use it more for smaller things.
Exactly. You could almost think of it like this. Solana feels like a 6-lane highway, super smooth, super fast. Ethereum, while it's incredibly powerful and secure, sometimes feels more like a busy downtown street, Lots of traffic, maybe some tolls.
That's a great analogy. So it's not just the raw speed, it's the affordability that the speed unlocks. That must be driving this user surge.
Absolutely. That combination, the high throughput, meaning handling tons of transactions at once and those super low costs, it's directly made Solana the undisputed leader for retail activity, for everyday user engagement. It's the place where people are just doing stuff because it's fast and cheap. We're also seeing lots of DeFi activity stick around on Solana too.
And DeFi is decentralized finance, right? Like crypto banking.
Yeah, basically lending, borrowing, trading, all without needing a traditional bank. Solana's efficiency makes it great for that too. It's driving real use, not just speculation.
Okay, so the big takeaway for this first part. Solana's speed and low fees aren't just tech specs. They're fundamentally changing who uses blockchain and how often. It's pushing towards, maybe, truly widespread adoption.
If we look under the hood a bit, that speed comes largely from its unique consensus mechanism. It's called proof of history. It's like having a super fast verifiable clock built right into the network. It timestamps everything, creating a historical record that helps order transactions incredibly quickly.
Like pre-sorting everything so it just snaps together.
Kind of, yeah. It allows for that parallel processing that gives it such high speeds. And looking forward, there's also FireDancer readiness. FireDancer is essentially a brand new, super efficient software client for Solana. Once that's fully rolled out, it's expected to make the network even faster and, importantly, more reliable, more resilient.
Interesting. So Solana is all about optimizing this single super fast layer. What about Ethereum then? You said they're playing a different game. Are they just trying to catch up on speed, or what's their focus?
It's definitely a different strategy. Ethereum is focusing more on, let's say, strategic evolution for the long haul. Their big strengths are attracting institutional money, what we call institutional inflows, and having this huge established community of developers building things. They're not really trying to beat Solana at its own game of raw single layer speed.
Okay, so how are they evolving then? I know there was a big upgrade recently. Pectra went live May 7th. What did that do?
Pectra was significant, yeah. It brought a couple of key things. One was for staking. That's where users lock up ETH to help secure the network and earn rewards. Pectra introduced EIP 7251, which raised something called the max effective balance, or max-E. Basically, it lets individual stakers, especially big ones like exchanges, manage way more ETH, up to 2,048 ETH instead of just 32 with a single validator.
So it makes staking much more efficient for the big guys.
Yeah.
Less complexity.
Exactly. It lets them consolidate, makes it easier and cheaper for large entities to participate in securing the network. And we saw the impact. Staked ETH hit a record 35.4 million. Over 500,000 ETH was newly staked just in early June after the upgrade.
Wow, okay, so that helps the big players. What about scaling for, regular users and transactions? Did Pectra help there?
It did. The other major part was EIP 7691, which focused on blobs. Now, blobs are basically temporary data storage spaces used by Layer 2 networks.
Layer 2s. Those are the networks built on top of Ethereum to make it faster and cheaper, right? Like Polygon or Arbitrum.
Exactly. Pectra increased the capacity for these blobs, meaning Layer 2s can now post much more transaction data back to the main Ethereum chain more efficiently. It reduces congestion on the main chain and helps those Layer 2s run smoother and cheaper. Think of it as adding more efficient data lanes for the Layer 2 traffic.
Gotcha. So Ethereum isn't trying to make its main road massively wider like Solana's highway. It's building out this whole network of faster side roads, the Layer 2s, and making it easier for them to connect back.
That's a good way to put it. It highlights the difference in approach. Solana, monolithic, integrated high-throughput layer. Ethereum, modular, with the main chain focused on security and decentralization, relying heavily on Layer 2s for scaling transaction volume. Both valid ways to tackle the scaling challenge, just aimed at potentially different needs.
Okay, that makes sense. So to summarize this bit, while Solana's killing it with raw speed and low fees, Ethereum is playing the long game, strategically upgrading its core infrastructure with things like Pectra to support its growing Layer 2 ecosystem and attract institutional stakers. Different paths, different strengths.
Now, shifting gears a little to culture and what people are doing on these chains, Solana isn't just fast. It's become this really buzzing hub for consumer apps and real-world use cases. Take DePIN projects, that's decentralized physical infrastructure networks.
Right, using blockchain for real-world stuff like Wi-Fi.
Exactly, like Helium Mobile running on Solana. They have something like 980,000 daily network users providing decentralized wireless coverage that's huge.
Right.
Or HiveMapper, also on Solana, which uses dash cams to build maps. They've mapped over 563 million road kilometers globally. That's real utility being built.
That's genuinely impressive. And then there's the other side of Solana culture, the meme coin side.
Yes. Solana has definitely become the hotbed for meme coins, those tokens based on internet jokes or trends, often super speculative. It got pretty wild with political meme coins, like one called Trump, which, believe it or not, briefly hit a $27 billion market cap. Pure speculation, mostly. There was also controversy around others, like a Melania token with accusations of insider trading. It's the Wild West sometimes.
27 billion for a meme coin. Wow. And isn't there a platform just for launching these? Pump something.
Pump.fun, yeah. It lets basically anyone launch meme coin very easily on Solana, and it's generating significant revenue itself, around $10 million a week apparently, just from the activity.
From mapping the entire world's roads with HiveMapper to, well, launching joke coins on Pump.fun. Solana really does cover the full spectrum of internet culture, doesn't it?
It really does. It shows what happens when you have a platform that's that accessible and low cost. It becomes a sandbox for everything, the serious and the silly.
It's fascinating. Okay, so beyond the memes, how's the broader DeFi space looking? You mentioned it's growing.
Massively. Overall, DeFi, again, that's decentralized finance, saw monthly active users soar by 240% year over year. We're talking over 340 million monthly users across all chains. That kind of growth suggests it's moving beyond just crypto-native speculating. It's becoming more embedded. We're also seeing DX's decentralized exchanges where you trade crypto peer-to-peer without a central company grabbing a much bigger slice of the pie. They hit a record 29% of all crypto spot trading volume, up from just 11% earlier in the year.
29%. That's huge competition for the big centralized exchanges like Binance or Coinbase. What else is trending in DeFi?
Restaking is a big one. It's a relatively new idea, led mainly by a project called EigenLayer. Basically, you take ETH you've already staked and you use it to help secure other networks or services built on top, earning extra yield. It's created this whole new security as a service layer, already valued around $11 billion. And then there's the continued growth of real-world assets, or RWAs, coming onto the blockchain.
Like tokenizing stocks or real estate.
Exactly. Or increasingly things like private credit. Lending that happens outside the traditional banking system, now being tokenized and traded on-chain. That specific area, tokenized private credit, is actually driving about 58% of the RWA market right now. Of course, we have to mention the downside, too. Security is still a major challenge. Hacks and exploits cost users about $2.5 billion in the first half of 2025 alone.
Ouch. $2.5 billion.
Yeah.
Okay, so summing up this segment, Solana's buzzing with consumer apps, real-world DePIN projects, and yes, a crazy meme coin scene. Meanwhile, the wider DeFi world is maturing rapidly with huge user growth. DX is taking market share, and new trends like restaking and RWAs gaining serious traction, though security remains a risk.
Now let's talk about the institutional side, the TradFi integration, traditional finance. It feels like it's really accelerating. We're seeing clearer regulations in some places, and the infrastructure is just getting more robust, making big institutions more comfortable dipping their toes in. A huge driver here has been the launch and success of spot Bitcoin and now spot Ethereum ETFs, those exchange-traded funds.
Right, those make it super easy for traditional investors to get exposure through their normal brokerage accounts.
Exactly, and they've pulled in billions and billions in assets under management already, legitimizing crypto as an asset class for many institutional players.
And is Solana seeing some of this institutional interest too, beyond just retail?
Definitely. It's not just Ethereum attracting the big money. We saw Ondo Finance, a big player in tokenized real-world assets, partner with the Solana Foundation. Their goal is to help standardize how these RWAs work on Solana. And maybe even more impressively, Apollo Global Management, they manage something like $785 billion, launched a tokenized private credit fund directly on Solana's DeFi ecosystem.
Apollo. On Solana DeFi, that's a massive vote of confidence.
It absolutely is. It shows institutions are looking beyond Ethereum for platforms that can handle these kinds of applications efficiently. But Ethereum, naturally, has incredibly deep corporate connections, too. We saw JP Morgan launch a version of its digital deposit token, JPMD, on Base. That's Coinbase's Layer 2. That's a major bank using a public blockchain infrastructure, albeit a permission token, for settlement tests.
A big bank like JPM using a public chain layer.
Yeah.
That feels significant.
It is, and Mastercard is also working with Ondo Finance to bring RWAs onto its own multi-token network, bridging traditional payments with blockchain assets. And look at India Reliance Jio, the massive telecom company there, is working with Polygon, another Ethereum Layer 2, to explore blockchain integrations for its 450 million users. The scale is potentially enormous.
Okay, so TradFi is definitely getting involved on both sides. What about stablecoins? You hear so much about them. Are they part of this institutional picture?
Hugely important. Stablecoins, those tokens pegged to things like the US dollar, are becoming absolutely critical. They're like the digital rails for finance now. An interesting trend is that USDC, one of the major regulated stablecoins, has actually overtaken USDT, the longtime leader in terms of transaction volume, especially on these low-fee chains like Solana, where moving them around is cheap. And get this, reports suggest major retailers like Walmart and Amazon are seriously exploring launching their own USD-pegged stablecoins.
WalmartCoin, Amazon coin, why would they do that?
Think about the fees they pay on credit card transactions. Billions every year. If they can get customers using their own stablecoin for payments, they could potentially save a fortune on those interchange fees. It's a massive potential disruption.
Wow, okay. So, wrapping up the institutional angle, both Solana and Ethereum are attracting serious interest from TradFi and big corporations, fueled by things like ETFs, clearer regulation, and the potential of RWAs. And stablecoins are becoming this fundamental layer connecting it all, maybe even leading to retail giants issuing their own digital dollars.
So stepping back, as we look towards the rest of 2025, you really see these two distinct narratives playing out, don't you? Solana, with its explosive retail growth, incredible speed, low costs, and this vibrant, sometimes chaotic cultural scene. And then Ethereum, taking a more measured strategic approach, focusing on institutional adoption, building out its Layer 2 ecosystem with upgrades like Pectra, leveraging its massive developer base. They're not necessarily direct competitors on every front, but both are undeniably pushing the entire crypto space forward in really powerful, different ways.
It really makes you think, doesn't it? As we move forward, which path will define the next big wave in crypto? Is it Solana's model that's super fast, super accessible, almost consumer internet feel? Or is it Ethereum's approach, the deep infrastructure, the institutional ties, the robust layered ecosystem? What do you think listening to this? Is Solana's momentum unstoppable? Or does Ethereum's foundational strength and strategic evolution give it the edge in the long run? Let us know your thoughts down in the comments. We'd love to hear what you think. And hey, if this deep dive helped you make a bit more sense of the Solana versus Ethereum dynamic, do us a favor, hit that like button and definitely subscribe for more crypto insights.